Are you an expat dreaming of owning a home in Germany? Hey there, and welcome back to Hypofriend, your favorite channel dedicated to buying a property in Germany. My name is Christopher, and today we will go over the different types of mortgages available in Germany. Make sure to stay until the end to hear about the various type of mortgages. So let's get started. First up, we have the annuity mortgage, or as it's called in German, Annuitätendarlehen. This is the most popular and most commonly used mortgage type in Germany. The annuity mortgage means that you have a fixed monthly rate, which comprises of the interest payment as well as principal amount. This means as time goes on, you repay part of your mortgage, meaning the interest portion of your monthly rate decreases and the principal repayment increases based on the loan balance. The annuity mortgage offers predictability and stability, making budgeting more manageable. It is perfect for those seeking long-term planning and a smooth repayment journey. Next up, we have a building society mortgage, or as it's called in German, a Bausparvertrag. In a Bausparvertrag, you join a building society in which you save a certain amount regularly, and in the future you become eligible for loan to borrow from the society at a certain interest rate. This offers security and predictability, making it an attractive choice for those who want a structured loan and savings process. If you want to learn more about this particular type of mortgage, we already made a video. There we will go into all the details about this particular type of mortgage. Next up, let's discuss the variable rates, or as it's called in German, variable Darlehen. As you might have guessed by the name, here you don't have a fixed interest rate, but the interest rates are fluctuating based on market movements. So they can increase, which increases your monthly rate, as well as decrease, which reduces your monthly rate. Usually these kind of mortgages are fixed on a reference interest rate by the European Central Bank. Most commonly one is the Euribor, which is adjusted every 3 months. Variable rate mortgages might be more suitable for people who are able to take the risk of interest rates increasing, but also want to benefit from the market potentially decreasing and reducing your overall costs. However, these kind of mortgages are not always the easiest to get because the banks usually need to see that your financial situation is good enough to cover the risk of potential increases. Most commonly, these kind of mortgages are used when you want to buy a property at the moment and you are expecting funds from somewhere else and you don't know yet when they will arrive. So you're selling another property maybe. Then you buy the new property, get part of the loan as a variable rate, and then once you sell your previous property, you can pay off that variable rate in one go. Moving on to one of the less commonly used mortgages is the full repayment mortgage, or in German, Volltilgerdarlehen. This mortgage is essentially also a type of annuity loan, but instead of having a loan balance at the end of the fixation, you have the mortgage set up in a way that the entire loan amount is fully repaid within a set interest rate fixation. The full repayment mortgage is less commonly used because it is generally reserved for the people at or after their first fixation, when they have a certain loan balance and they want to repay it in another 10 to 15 years. And then they set it up in a way that the entire loan is fully repaid, so they don't have any risk of rising interest rates and they have the full security and control of the interest rate. Lastly, let's talk about interest-only mortgages, or in German, endfälliges Darlehen. As the name suggests, these kind of mortgages don't have a principal repayment included. Here you're only paying an interest rate and the principal or the loan balance always stays the same throughout the loan term. This type of mortgages appeal most to people who are buying a property that they plan to sell again in the foreseeable future, or properties that are intended to be rented out in the future, because here interest payments staying stable might be beneficial for your taxation. This is always a topic where you have to speak with your tax accountant to make sure this is a good choice for you. And there you have it. Those were the 5 main types of mortgages you will come across in Germany. Before making a decision on what type to choose, it is essential to evaluate your own situation, your financial capabilities, and your own risk tolerance. And if you find this choice a bit overwhelming, we would be happy to help you and assist with finding the right property that fits your personal situation the best. If you found this video informative, don't forget to hit the like button and share it with all your friends. Also, subscribe to our channel for more helpful content. Thanks for watching and see you next time.